Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Happy Friday, everybody. Actually, I say happy Friday every time, and I realize it is not Friday for you guys, but we only record on Friday. So every time you listen to this podcast, it will be a happy Friday. I hope that brings some good energy to your day, whether it's Monday, Wednesday, whatever day it is for you. It's a Friday here, so happy Friday. I hope everybody is doing great. It is going to be a good episode because we got Brock Holliman with us from Florida. Brock does build to rent. In fact, he does a lot of things, and he has a lot of wisdom to impart on us today. So I am super excited to jump into this. Brock, thank you very much for hopping on the show.
Gabe, thanks for having me on, man. Can't wait to talk.
There you go. I told you before we got on here, we really like starting with stories, hearing how people got to where they are. So why don't you take us to the beginning of your real estate journey and tell us how you got started in real estate?
Yeah, so I'll try to go quick because I could take hours to tell the story. But it really started for me when I was in high school. My father was a construction guy. He was a builder growing up, and you can't really real estate. I mean, it's valuable. Land is valuable, but real estate becomes a lot more valuable when you actually construct something and put it to use. So that was always, a wonderful, like another wing or spoke. But I loved the real estate side. But he kind of introduced me to it just by being a builder. But back then he had, we were in the financial markets. And this was in high school, by the way. I started when I was it was like 2011 when I was really getting interested in it. But I had a lawn mowing business. And instead of a regular, customer, it was the banks that had all these vacant properties. So I had a couple banks, and they had, 30, 40 properties a piece, and I'm sitting there, mowing their lawns. And it's a lot easier because you collect from two people instead of, 80.
That's smart.
Yeah.
How'd you get in contact with these banks? As I'm sure this was in your early 20s, maybe.
Yeah. Well, I was 17. So,
shit. Okay.
16 and 17, actually.
Yeah.
Just was able to drive. And I had a bank account in there, and I remember I had a few $100s in my account, and then my dad's friend worked at the bank.
There you go. Connections.
I remember I didn't know how to manage any money. I remember having overdraft fees, and he took me in there and was like, you're gonna try to negotiate these fees off of your account. So he made me do that, and I'm sitting there next to him, and then, one thing leads to another. I had a couple lawn mowing people back then, and then, they said, we'll give you a try out on this. So anyways, that ended up working out pretty good because as I'm sitting there mowing these lawns, I'm thinking about vacant properties and like all this stuff. And this was in Memphis, Tennessee. But that's where it kind of began because my mind's thinking about real estate, even though we're talking lawn mowing. But back then, everything, there was so much vacancy as far as like vacant homes and all this stuff that people had lost in the crash. And the big thing was auctions. I had no idea about these auctions, but I knew how to work a computer, and the internet was getting pretty good then. You could figure out a bunch of stuff. And I remember my dad one time, he said, you should check into these foreclosure auctions. But I'm at the time, he was like thinking when I get out of high school, which, a couple years. But I remember as soon as he said that, I was like searching it on
Done. Let's do it, Dad.
Yeah. So I looked it up and found the next auction. And I was terrible at going and showing up at school and terrible at grades. But I remember right after that, I went down to an auction I found online at the courthouse steps. And, by chance, my father had a speeding ticket court date that date. And I remember being on the steps at the auction and then making eye contact. I'm like, oh, shit, here he comes. He thinks I'm at school. And I was a little nervous, but turns out he was pretty proud of me skipping school and being at this auction. That kind of rolls into things. But you didn't back then, like there was so much inventory that these banks had to offload off their books that the rules were kind of relaxed. So nowadays, if you go to a foreclosure auction, you're going to have to pay cash 9 out of 10 times right there. Yeah. You're going to have to bring a cashier's check. or it's online where you have to have funds in an account. But back then, very lenient, too much inventory. So you could have like 72 hours to pay. And
Oh, interesting. Okay.
yeah, and if you could sweet talk them a little bit, then you could buy another 24, 48 hours out of there. Oh, I'll be right there. I missed the
Right,
bank
right, right.
today.
Gotta go talk to my guy.
Yeah. But at the same time, what I'm doing is like, figuring out the internet public records, who's buying cash in these little zip codes and that I won the bid in. And then, just calling them up. And it's not easy being 18 and showing up, little kid trying to sell them a deal
Yeah.
and telling them, I know you're used to closing like a traditional investor. You close in 30 days, cash, blah, blah, blah. No, we got to close in 24 hours.
Yeah.
And you got to send the money to this account over here. And, no title work, no nothing like that. So it was a little difficult, but at the same time, I was able to stack win after win after win, a couple thousand, 5,000, 7,000, off these little wholesale fees. The cool thing was back then.
Oh, you were wholesaling them. You would
wholesale
win the bid, right? You'd win the bid on the steps, and then you'd take that contract, that winning bid, and you'd take it to an investor and be like, "Hey, I will give you this opportunity to buy this property if you give me $5,000, $1,000, whatever."
Yeah.
That's
Well, I wasn't even
genius.
telling them what I was getting. I was telling them, say I won it for, and these houses were so cheap. This is Memphis. Say I won one for 12,000.
Hmm.
I know he's paying 24. I'm like, okay, I can get you this same house. We got to close quick. I can get it for you for 18. And then he would wire or she would wire the money to the trustee's account at the attorney where they held the bid or the auction. And then what they do is they take whatever so if I wired them $100,000 on a $12,000 bid, they take a week or two, and then they would cut a check back to whoever the bidder was, which was me.
Oh, interesting. Okay.
So yeah, so they were basically paying me my wholesale fee, which was pretty cool.
That's not no longer is that a strategy that can be used, but it's pretty interesting.
Yep. Unfortunately, but maybe there's a way to do something like I don't know. It's pretty difficult though. There's not enough inventory now to make that work. But yeah, that led to that. Finally stacked enough up to get my first couple of rental properties back then, and then do a couple of flips, and but also along the way fell on my face and blew all my money because you're a kid, you're not used to making that kind of money. You just start spinning, and kind of pump the brakes, which was probably the worst thing that you could do because you feel like you're rich and I don't need to work today. Take too many days off. So big lesson learned there. But yeah, you fast forward. I guess that's 13 years ago. Wow. So 13 years later, now tons of flips, tons of. Now we're doing a ton of new construction. We're building 150, 200 houses a year down here in Florida, and much better market to be in. And I learned, buy and hold is really where you make the money in this game, where you can produce cash flow and income, over time, and tax breaks and appreciation, all this kind of stuff. So, in a nutshell, that's the last 13 years.
In a nutshell, I love it. Well, it's a very colorful starting story. I love to hear that. So it sounds like you got into construction, which isn't a path that a lot of investors take, but those that do, they really like it. It sounds like your dad had a construction background. Is that what kind of brought you that way to do new builds, or what got you into the new build side?
Right. Yeah. So construction, like since I was a little toddler, I just remember being out on the job site with him. Like he would always put his foot up my ass. Okay. Like make me feel bad. Like, oh, you're sleeping and you want to stay at home with your mom today? Like, or you want to come be a man. So, okay, I'll come be a man. So anyways, always as like from a 2-year-old to, even I remember on my 10th birthday, he was making me hold a screw and while he was drilling and it slipped and it went right through my finger. And, just all this. So construction was just sort of in my blood, just being around them. But with that being said, like when that story started in 2011, builders went bankrupt all over the country. So construction was at like a standstill. There was too much supply. All these vacant properties. Why do we need to build new houses and sell them for $60,000 when they'll cost $120 to build? It makes no sense. But during the times of the wholesaling, like it went from, I met the one guy, I remember my first investor, his name was Charles. And then I remember, it leads to another and another, and you got a full investor or buyer list that I'm wholesaling properties to. I come later learn, as time goes, the hedge funds were the real ones that you could make easy money with as far as flipping to these guys. So those were the connections I started to develop. Then, as prices came back enough and those funds were gobbling up all the inventory, prices elevated to the point where you could now build something and sell it at a profit.
Right.
And I'd never built anything. I know my father had, and I'd actually moved to Florida as fast as I could when I felt like I had enough money, and I thought, oh, I'll do the same thing down here. Fell on my face. It's totally different. Memphis, you can buy houses for $5,000. Down here, there's nothing like that, and you're competing against people with real money. So that whole game was not nonsense. But as I fell on my face, like, I started to ask these guys, what about new construction? What about new construction? So one fund, and everybody probably knows them now, they're publicly traded. They decided they were going to try out their first new construction build to rents. And I sold them their first three. Okay. And it's American Homes for Rent. Now they don't touch them. They have their own division where they do their own build to rent in-house. They do their own development and all that stuff. But happy to say that we were the first ones to sell them any new construction, and it was in Memphis. And my dad was still up there, and they were still leery. They were like, "Oh, but nobody's building. Do we do this?" And so he had a partner. They were willing to roll the dice, and I said, "Let me just be your little
Guinea
fish."
Pig. Yeah.
And I'll just sweep the floors. I'll just take notes. You send me on to Home Depot, do whatever you want to do with me. And, and I'll just get a brokerage fee and I'll work for free on the construction side, shovel streets, whatever it is. So I just wanted to learn. So that was it. And off those first three, I remember carting in investors from California. I remember some other hedge funds, and then all this stuff, like I'm touring them through there as fast as I can and trying to set up appointments to build a little bit of a reputation. One thing leads to another, and I get, I can secure contracts now that were directly with me instead of, my father and his partner, where, I could actually prove myself and all that kind of stuff, and be able to get onto this game, and do some volume with the new construction. So that all worked out pretty well. I ended up partnering up with some other folks, and partnerships don't always go the best. So anyways, stuff happened. Ended up partnering with my father. Now, my father and I started this company when we moved to Florida. I moved to Florida. He follows me. Him and my mom follow me. I think I could move to Alaska. They'd follow me there too. But anyways, we started something down here in 2018 where we only built 9 houses that year. Okay. The next year we did 19. Then it went to 76. Then it went to 188, and now it's really snowballed into something that's turning out really great. So
I'm curious. I've never done a new build. Everything that I've bought has been existing. I've added on to things that I've purchased, but I've never done a new build, so I don't know the process. Take us through step by step, like that. Those first couple of deals, once you moved here to Florida, what were the steps you took, and really go into as much detail as you can remember how you got the new build side, the build to rent side up and running.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah. So, I mean, there's two big parts of it. I mean, so when you are going to choose an area for build to rent, you have to make sure that the numbers are going to work. Like, you can't just pick any area.
And the number you're talking about is the rental rate.
Right. The rental rate versus the cost of construction and the cost of land.
debt.
Yeah. And the appraised value of the properties. Like we can't go into a $1 million neighborhood and expect that we're going to be able to kill build to rent and cash flow. It's going to be, that first starter home type of thing, maybe one step
Workforce
up.
housing, yeah.
Right. So the area needs to qualify first. Which is Florida is cheap compared to maybe Seattle or maybe to California or New York.
And real quick, turn your mic so it faces directly at your mouth. There you go. Perfect.
Sorry
Keep
about
going.
that. So but so we picked that, and we picked some areas, and they're not that easy to find, even though we're a cheaper place, and then maybe we're not as cheap as we used to be. Definitely not. But we found some different spots. So the numbers qualify there. And then when you're going to build in an area, every area that I've built in, whether it's in Tennessee, Mississippi, in any of these markets we're in Florida, they're all different. And if you want to make money as a builder or, build efficiently as far as timeline goes, which a lot of people struggle with, you have to know the ins and the outs of everything. Like, what does the permitting process look like? What can make you not get a permit? What can, be a big cost? Like, I had never heard of endangered wildlife, situation until I got to Florida. Like, there was a month, the worst month was we spent like $56,000 on endangered turtles to get them removed from various lots that we had purchased.
Oh, wow.
And you live and you learn,
Yeah.
And then I bought this one, and I never knew about wetlands. Okay. I bought this multifamily spot that was supposed to host 22 townhomes that we could build and keep. And, I walked it in the dry season, didn't know anything about a dry or wet season when I first got here to Florida, and everything looked great, Then,
This is perfect. Let's build.
Yeah. Then we spent $100,000 on plans and development stuff, and come back 6 months later during the wet season, and like the back half is a swamp. And then the county then shuts it down because they say, oh, this is an endangered wetland, when they didn't say that at the beginning. And then the map gets revised, and then you get screwed. But you gotta look out for these things. But you live and you learn. It's hard to learn everything without really falling on your face a little bit. Yeah, you have to do it.
Yeah.
But yeah, so just every little mistake that is made or anything that we learn is all documented here. So it allows us to really speed through these processes, and like McDonald's can't make a ton of hamburgers if they don't have a checklist. They don't know exactly what goes in each hamburger, and it's not an assembly line to pump these things out. And that's kind of what we want to model is fast food, but fast houses, but still great quality.
Yeah. Learning from your mistakes is so important because those are the lessons that stick with me the most. I can sit down with somebody who's really knowledgeable about a specific topic, and they can tell me everything they know, and maybe 10% of it will stick in my brain. But if I make one mistake, I'm going to remember every single detail of that mistake, just because it's so emotionally charged. And so, it's part of the process, just getting out there, doing things, falling on your face, and then learning from those mistakes, taking it on to the next deal that you do, the next project, keeping a checklist so you remember exactly that mistake and then the solution to that mistake that you can bring on to the next deal.
Yeah. Just because you make a mistake doesn't mean you quit. I mean, it's, like I never thought I'd laugh about the wetland deal. And
that hurts, man.
No, it's
and
fine.
the 50, what did you say, 56,000 for turtles? That would be, that's a big cost that you probably did not have in your underwriting there.
Definitely not.
What's the build price per square foot out there in for workforce housing?
Yeah, so it varies a bit. So like when you're in Central Florida, closer to Orlando, it's going to be about 10% cheaper to build. It's just if you saw the engineering and like the wind codes around Florida, the closer you get to the coast, obviously you have to beef up your engineering a bit. And I like to keep as many of these properties as I can. Well, I guess I'm going to go off track. Okay. So up there in Orlando, say it's around $110, $115 a foot. Okay. To build. And now there's all these other variations that that we need to add in. Like, we got lot costs, we have impact fees that will vary by area and county, and that kind of thing. When we get closer to the coast, we're north of $130 a foot, and we could probably be a little bit less than that. But I also, when we get closer to the coast, I want to keep these things as long-term investments and really kind of scale the portfolio. And we sell to investors mainly. So we'll sell like 5% retail, and we do that to keep our appraised values elevated and nice comps for when I either refinance or our investors go get a loan, and they've got built-in equity, and it helps the deal underwrite a hell of a lot better for the banks and everything too. But when we get closer to the coast, we do a lot of different upgrades. Like I beef up the engineering. We put in extra rebar, extra concrete downcells in the walls because they're all concrete block. I go with an upgraded shingle that can withstand 165 miles per hour wind. We have an option to put in these hurricane impact glass, like this window behind me. I could take a
bulletproof glass.
Yeah, do that. It's not going to break. We don't have to do that, but it makes our window packages go up, $5,000, $6,000, $8,000 a house.
But in the long run, I mean, especially if you're planning on keeping them in your portfolio, that means a lot less maintenance in the long run, and I'm sure it affects your insurance costs as well.
Yeah, I should actually spend more time on getting the studies done with the insurance companies and letting them know about all this stuff, because I don't think they actually take that into effect or account. But our insurance costs are not as crazy as people would think. Like, our average house is worth, and like in this area I'm in right now, we're in Sarasota County. The average house that we're doing around here has got an appraised value, say a 420. And the insurance for everything for the year is $1,200, $1,300 a year.
Oh, okay.
Yeah.
That's not bad.
So very, very reasonable. And it's like, once you get over the 2020 building code, these insurance rates are a lot cheaper. And the crazy thing, before that last hurricane we had, this insurance rates were, $700-$800. So this is,
oh, wow.
Yeah, they were really a lot cheaper. But yeah, on top of that, like when you've got 500 tenants and you've got a hurricane coming, we have a property management company here too. So we manage everything for our investors and all of our properties. But we send out, a bunch of alerts like, pull your furniture inside, tropical storm alert, blah, 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 and people, not everybody's going to do everything,
Yeah.
And like, it's a peace of mind for us, and for 96% of our investors don't live in Florida. So it's like they can't see it, but they hear the news, and the news always blows the hurricane way out of proportion, so they get really nervous.
It's the end of the world.
Yeah, just chill out, it's all good. You don't want to worry about did 500 tenants put their hurricane shutters on, so we're not going to have busted out windows all over the place. It's just like one of these things. It makes you sleep easy when you see you're in the cone of a storm. So
yeah, makes sense. Well, shoot, man, we've already gone through our time. I really love everything you've shared with us, but it is time to jump into the quick question round. Are you ready?
Yeah.
All right, let's do it. Starts with books or any form of education. Could be movies, could be audiobooks, YouTube channels, whatever. Just give me 2 recommendations, one for general life wisdom and then one for real estate.
Yeah, general life wisdom, the 10X rule, I think. I definitely feel like, I mean, that's like a 6th time a year I listen to it. If I'm feeling like I'm slacking or my energy level's down, that is like my life and business Bible. So the 10X rule by Grant Cardone. For real estate, I'm not gonna say the old one
Rich
that
Dad,
everybody's
Poor
gonna
Dad.
say. Yeah, I'll elevate it. And this is the honest to God truth. I love Rich Dad Poor Dad, but the next one that was in the little series, the cash flow quadrant, I think was definitely way more impactful. I think the first one, like, it was like wonderful storytelling and gets you excited, and you start to learn long money is much better than short money. And then the next level is the cash flow quadrant. I think that was a wonderful book and really makes you want to blow up your real estate portfolio into big business. So cash flow quadrant, Robert Kiyosaki.
Perfect. I love it. All right. Next question is for your younger self. So let's go back to the Brock who was just mowing those lawns for the banks back in the day. Go back to him, look him in the eye, give him one piece of advice moving forward.
Yeah, don't stop. So I fell on my face multiple times. I remember making it to $99,000 and I thought, ooh, I'm almost at 100, but I made it to negative before I made it to 100. And it was all because I got lackadaisical and I relaxed and I thought I'd made it. And, whatever you're doing to make yourself stack some wins, keep on doing it. I mean, you don't, and mimic these people that are, that have done it, done what you wanted to do. None of their qualities is giving up. So, just keep doing what you got to do to stack your money.
Yep. Yeah, and I feel like for me at least that's why celebrating wins is so important, because it does give you that emotional, like, that release that you're looking for. But then you just get back into it if like, I'm going to celebrate this. I'm going to take a weekend, go fly to fucking Tahiti or wherever you want to go. But then after that, just get right back to the grind, because it's so easy to feel like you've made it once you have this arbitrary goal out in front of you. But once you get to that goal, there's more to do. You're still alive. You still got to make some progress. So
yeah,
celebrate
you don't
those
get
wins.
slapped in the face. That's the worst feeling. Yeah,
absolutely. All right, next question. I think I know the answer to this one, but I'm going to ask it anyways. The United States is a big place. It's a lot of opportunity out there. Give me the single city, the single metro you're most excited about investing in today.
Ooh. So I'm going to go with this whole Sarasota County area. I really love it. I think it's a wonderful opportunity. We're close to some of the most beautiful beaches in the entire state. There's so much economic activity here. There's, it's the third to fifth richest county in the state of Florida, with, net migration that is through the roof. This town I'm in right here, Northport, is in the top 3 fastest growing cities in the country for like the last 5 years in a row.
Wow, that's crazy.
Yeah. And we've got like the number 1 public school system in the entire state of Florida and Sarasota County. I mean, just it's it checks every box for me. And it's not the only place that we're doing business right now, but it's where my main focus is as far as my capital. I'm most excited about this place and being able to, if I have any investors that back out of a deal, I'm like, okay, thank you. I will keep it. I'll find a way to keep it.
Actually, I had to Google where Sarasota County was. But yeah, it's right between Tampa and Fort Myers. I bet it's a very beautiful area down there.
It is extremely beautiful. Yeah.
All right, next question is about finding deals. It all starts with getting in contact with the seller and writing up that purchase agreement. So what's your favorite way to generate leads and find new deals?
My favorite way, and I don't think we even utilize this enough, is text campaigns. So I love text campaigns. I think it's the most successful. It's the easiest, and it's the way it's sort of where we're at in this world now, because a lot of people have gotten spoiled with texting and emailing, where they're not as sociable as they used to. Maybe they're more comfortable responding to something like that instead of some cold call. Hey, let me buy your property. Pay cash. And so I think that's been a huge thing for us. We use it a lot to acquire new lots.
Yeah.
And I think a really good thing to do if you're going to do something like that, I know I'm maybe going too deep, but is a CRM that, a lot of people have iPhones. So if you're sending a message, it shows up as the blue message. If you're sending a YouTube video, like an introduction or something, then it shows up as like a real video. They can press click. And that, I think I found that extremely impactful and had a wonderful response rate from that. So,
yeah, I love texting too. The issue that we've been having is that most of the platforms that provide mass texting have shut it down just because of like 10DLC rules and all that kind of stuff. We were using, we went through a lot. We went through Launch Control, Lead Sherpa, all the platforms. But what platform do you guys use for texting?
So now, like I said, we don't do it enough. I switched everything off of. We were on LionDesk, and I switched it all over to Salesforce. Since I switched it to Salesforce over a year ago, I've tried SMS 360, I think, and something else, but they were not good. So really, we've been really leaning on our wholesalers and cold calling the last year, which is I'm not proud of, because we haven't been utilizing our best thing.
Yeah.
But yeah, I think it's really similar to like what you just said. the other platforms, there's a lot of restrictions, and I feel like it's making it not as easy to use as it used to be. But I'm still in search of that, because I love Salesforce. Well, so you can just download any app and plug it right on top of your system, and you can reach out to any one of your leads or any one of your investors or anything like that. So
Yeah, we use monday.com. I love Monday, but I've been tempted to switch to Salesforce just because it's like the de facto CRM. It integrates with everything. Yeah, tempted. One of these
so
days.
nerdy,
Probably.
dude. When we talk about Salesforce, so it's unbelievable platform, I think.
Yeah.
So
All right. Second to last question. This is about lessons learned. You've mentioned, you got to fall on your face to learn those big lessons. So, what was a deal that went a little sideways for you, and then what was the biggest lesson you pulled from it?
oh boy. I mean, we had the deal with the wetlands. I mean,
Yeah,
that just it's like a fall on your face, and like you got to learn if you're going to be in a new area, you got to learn everything. And then I've had another really tricky one where it kind of broke up a partnership where went into something. I'm going to help this guy out, get out of something. We were going to do a lot of stuff, and but I don't think it was really me that failed on that. I told him I wasn't going to make any money, and then at the end, I didn't have a contract together. So it was all, him saying, oh, well, this lost money, so this is going to come off the profit of the stuff that I picked that actually made money. And, I walk out of the door with nothing, basically nothing in my pocket compared to what needed to happen. So, do your research and make your checklist before you make a big decision. And also, if you're going into a partnership, make sure that everything's aligned, written out, and everything's, on paper and signed. Because without that, you're just leaving the door wide open for a screwing. So,
Yep, absolutely. Partnerships, they can be the best thing that happens to you, and they can also be the worst. So, the way to get around that is, you're right, just make sure that everybody understands what they're going into, and make sure you get it in writing.
Sure.
All right, brings us to the last question. This is for the listeners. I'm sure people want to reach out, get in contact with you. Two-parter. The first part is, where can they find you? And then what can they expect when they reach out?
Yeah. So you can find me. Well, please, everybody, check out our product that we build and we rent. Okay. You can go to mynewrental.com. And if you want to find out more about the product, you can go to mynewrental.com/invest. And we have a little form on there. You fill it out. My team will schedule a meeting. We can get on a call. We can discuss real estate. We can discuss, the Florida market, whatever we're building, all that kind of stuff. I've got a social media handles that are, at follow.brock on, Instagram, Facebook, YouTube, all that kind of stuff. And, try to be active on there. I love to have conversations like this. I love to talk about real estate. If there's any way we can help each other or connect or whatever, reach out, because I love to talk business and real estate.
Perfect.
Yeah.
I'll put that link in the show notes. So if y'all want to reach out, just click the little more in the description. It'll pull down that full description, and in there you can find Brock's links. All right, man. That wraps it up. Thank you very much for hopping on the show.
Yeah, thanks, Gabe. I appreciate it. Have a good
Absolutely.
Friday.
For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you want to support the show, just give us a like, subscribe, share. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.